Good day, everyone. The ADP payrolls, as we know, showed a surprise decline back in June and a very wide miss. And it was the second negative print, actually, since 2020. So that was kind of startling to the market, a bit of news. And meanwhile, job openings jumped nearly 8 million in May, and continuing claims just hit their highest level since 2021. So we got a mix of fewer hires, more openings, and rising unemployment claims. And so a lot of people were betting that the jobs report would be pretty poor. And nevertheless, it came in ahead of expectations, quite strong, and it remains a slow to hire, slow to fire labor market. Employers added 147,000 jobs in June, above the 115,000 forecast. And unemployment was expected to rise, but it actually ticked down to 4.1%. And with moderating inflation, a decent jobs market, strong earnings, and rising global liquidity, the general uptrend in stock market averages and in Bitcoin may very well continue. We also see that the dollar is at an inflection point. Now, the conventional view is that when you get rate cuts, this is generally seen as bearish for the dollar, as lower yields reduce its attractiveness. But the contrarian view is that in periods of global stress or disinflation, rate cuts can trigger a rush into U.S. treasuries and dollars for safety and collateral needs, especially if global liquidity is tight. We also have many emerging markets that have sought alternatives to the dollar, but global trade, finance, and debt remain heavily dollarized. So many corporations and sovereigns in non-U.S. economies still have substantial dollar-denominated debts. In a global risk-off or liquidity squeeze, demand for dollars can spike as these entities scramble to cover obligations. Now, history shows that sudden dollar strength can catch such economies off guard. We saw this during the 1997 to 98 Asian financial crisis, and also during the 2020 liquidity crunch. The technical setup, where the dollar is at channel support, the risk of a violent reversal, and the mechanics of dollar demand during risk-off events are well supported by history and current market structure. The vulnerability of de-dollarizing countries with U.S. dollar liabilities is real. The idea that rate cuts can trigger a dollar surge in certain environments is supported by recent and historical events. So that's kind of a lot of the market telegraphing that the dollar could very well bounce here. Well, we'll just have to wait and see. It is at an inflection point. But this market has also kind of been at its own inflection point back in April when the Trump tariffs shocked the world. And it's pretty much been straight up from the bottom since then. Global liquidity, as we pointed out, continues to, well, I would say it looks like it's breaking out again. So, that's another nice tailwind for the markets here. And meanwhile, we're looking at, through our reports, obviously the nuclear stocks are doing very well. We've pointed out a number of these like VST, GEV, CEG. They all continue their uptrends. And some of them have had continuation pocket pivots. So if you missed the first one, you can still get on board. There's companies like SBET, that are betting on Ethereum. They have a stockpile of Ethereum, I think about $500 million worth. And so there's a market bet that if Ethereum, well, Bitcoin looks like it may continue higher, and then Ethereum should follow along. And if Bitcoin keeps going higher, if history is any guide, then Ethereum is going to really catch up fast, and it tends to outperform Bitcoin at that juncture. And so I guess there is wagering going on this SBET company that maybe it's going to catch up. That gap down was caused by a lot of worry that there was insider selling, which proved not to be true. So it might try to catch up here, and it hit a high of 120 or something, and right now it's at 15 and change. So let's see. Gil, how are you seeing everything?
Let's see. I think we could be topping. How's that? I noticed that, well, I've got, actually, I'm doing a bunch of stuff this morning, but I got heavy longs, some miners right at the open. I've sold them since, so I'm trading them. So, I mean, because you got huge moves. I'm trying to get this chart to like go back to size you can see. So here we go. All right. So if you look at something like First Majestic, at the opening, it just shot higher. They announced their production. They blew it out. But you can see where when it starts to do this, it runs up really fast, and I get a MACD cross like that. I'm going to trade it out. So that's a big gain on the day, like 6-7%. If I have a concentrated position, same thing there. Other examples are like Endeavor Silver. They came out with strong production. And it's that time of the quarter when these miners will be coming out with their production. You can see that's rolling over as well. So I take that. At the same time, you look at these, you see the turn in my little friends, the leveraged inverse ETFs. So I'm just playing it, on this way. And because I think that the market's confused, you got tariff stuff going back and forth. Some of it is absurd, like 50% tariffs on copper. And Lutnick's out there, the Commerce Secretary, babbling about how their aim is to bring copper production to the U.S. It's like, what WTF? Okay, what are companies going to do? Like, dig up their mine and bring it to the U.S., or dig a shaft into the center of the earth and out the other side in Australia or South America or Mexico or wherever they're digging up copper? So the whole thing is absurd. I think they found that out. But then, yesterday it's like a market where you get lucky. So if you had this FCX, I'll get to that in a second, but that thing popped, but I'll talk about that in just a minute. But here you have, sticking to this, these are in uptrends. So they're moving higher. So I'm along these. And I sold my miners. So I flipped out looking maybe to buy back, but I think, market could be topping. So I'm open to that. You can see here the little mini double top on the NASDAQ composite. And you've got a ways to go before you get to the left side peak. So, I mean, you can't really call any double tops here, but you're in that area. So, and you're straight up off the bottom. So that's just kind of how I'm looking at it. And the evidence is kind of tilting that way. And so I just go with it. I go with the flow in real time, because you're in a position here where, okay, is this the start of a glorious new run higher? A lot of people seem to think so. You've seen spikes in bullishness on the American Association of Retail Investors, and then the National Association of Active Investment Managers, which is money managers, is showing 85% long. So everybody's bulled up, and it's possible you could get at least a pullback, maybe something deeper, depending on how it all plays out. But that's what I'm doing today, and I'm trying to stay loose, trying to stay nimble, and coming in where I see a fat pitch, taking it, and then blowing out and waiting to see how things settle again. If we look at technology names, here's Goldman Sachs, which I think is interesting. You're trading at 596. I'm sorry, what am I saying? 698.51 right now, just below the 700 level. It's the first time it's ever gone above 700. So what do you have here? Well, you have a potential Livermore Century Mark short sale entry if the market continues to reverse, because the market is reversing off the highs, right? I guess they were twisting the tariff news a different way today, and so that was all exciting. It's part of the negotiations, blah blah blah. Okay, so now it's kind of giving way, and we'll see how this plays out as the day progresses. But it's a very fluid, news-oriented situation, and I think you just have to be nimble. And just play what comes your way. I mean, I generally operate from the position that the setups will push me in the right direction. If I'm objective about the setups and just trade what I see, then they will naturally push me to the short side as the market weakens, and then they will naturally push me to the long side as the market strengthens. And you see that occur in real time. So, as long as you can remain objective, and of course that can be challenging because this market will shift very quickly, even within the span of an hour, say. But that's what what I'm trying to do here at this point of this move off the lows. And I played a lot of areas of the market very well, like the precious metals miners, but also, as I was talking about, you had copper moving yesterday when the Trumpkins put 50% tariffs on copper, thinking they're going to bring copper production back to the U.S. And I remember seeing that. Like, did they really say that? What do they really have in mind here? Just spewing. So you see Freeport McMoran had a spike, and to me that was something to sell into, and it's coming in. So sure enough, backing up towards the 10-day line, and volume levels are running pretty high. Is this going to fail? So if I just look at the COPEX, that's going to look a little bit like Freeport because it's one of the big components, but it also has Canadian miners in it as well. And so you bust in the 10-day line here. We'll see how it handles the 20-day line. And like any mining companies, if they come out and announce weak production, so these guys, Ero Copper, a Brazilian copper miner, which has done really well up until they announced that their new mine is not ramping up as fast as they expected it to. And boom, they kill it. So, if you're long something like that, and they hit on first day, you should get out as soon as you can. That's what I do, especially if you bought it much lower and you have a decent profit cushion in the position. Meanwhile, you've got First Majestic ripping higher, but it's starting to stall out. But they came out with great numbers. And then, as I pointed out a little while ago, EXK as well, Endeavor Silver. And you're going to see this over the next few days. So, the way I see it, if you have a company that announces excellent production, gold or silver, and they're just sitting there in the morning, like First Majestic was, like Endeavor Silver, really, just jump on them. Anyways, so let's see if there are any amazing questions. So that's basically what I'm doing. I'm just kind of looking around, playing it close to the vest, and to some extent chilling. So right now, I'm just long inverse ETFs, and they're coming in a little bit for me. So we'll see how that plays out. But, I'm just ready to move with it as necessary. Agriculture mostly down. Big stock, NASDAQ names. See, Apple looks like it wants to roll over. And in fact, you do have let me do this, a double top. If you can see my crosshairs, you did double top here along these left side highs over here. You did that on Monday. So there you go. Let's see, a lot of these hanging tight. So, if the market continues to weaken, let's say if this rally that's rolled over continues to roll over, then what you watch for are names that start busting 10 and 20-day moving average support. Here's NVIDIA acting fine. Pocket pivot volume signature so far based on the current run rate and, pushing higher. So that one continues to move. I think that they're talking about hitting a $4 trillion market cap. Oracle, what is it? The 4% earnings score or something like that, 11%. Hanging tight and doing pretty well. Tesla, of course, we know why Tesla is rolling over. The other areas that were acting well yesterday, which I'll just review briefly here, would be some of the semis. But you notice, look at AMD here. It looks like it's stalling along the 10-day line. Analog hanging in there, but you can see AMAT approaching the 200 level. You got as high as 197.96. I don't think that's the first time it's ever hit there. Well, you can see, look, it topped at that level back in February, although that does set up a double top type of setup. But really what you're doing is running into double top resistance. You're not really blowing through it. Arista Network still, acting well. ARM maybe starting to falter at the 20-day line. Astera moving higher. I'm not sure what the news is there. They're announcing earnings, I guess. Intel coming in. Marvell rolling through the 20-day line. Microchip kind of hanging in there. Micron starting to roll through the 10-day. NVIDIA, I already talked about that. NXP, so these are holding up. And I think part of that is because Trump, yesterday they announced that they're going to allow U.S. chip companies to sell to China, either software, something like that, something that's positive for the industry. So it's kind of feeding on that right now. and that's why it's acting well. So if the market, depending on how the market plays out, you got the Fed meeting minutes later on today. I'll be watching to see how all of these things act, and whether we move more to the short side or we just remain in a quagmire, or a new theme kind of springs up out of all of this. But right now, I think things are very fluid. The market's trying to sort out all the tariff news, and we could go either way. So that's that, and that's basically my approach here. Watching those techs, they're acting well. If they start to roll, I may want to go short. Right now, pushing some of the inverse ETFs because of the reversal off the highs. I think we had the NASDAQ up over 200, didn't we, at one time earlier? Anyways, and so that's what I'm doing. So I'm fluid. I don't have any grand long-term strategy here. I think you're ways away from that, and we'll just see how this plays out. So anyways, that's it for me. You got anything else, Chris?
I think I would just emphasize that the sentiment indicators that you were talking about, such as the AAII, that's at a very high level right now, and also the name numbers are also spiking. And when that's happened in the past, it tends to lead to lower markets, at least temporarily. So this could be a minor top that I wouldn't be surprised, like within the next, say, several days that or less, based on the history. So I'm going to go ahead and send out charts that just show the history of these indicators. And
Cool.
yeah, both on red alert right now.
Sounds good. All right. Anyways, that's it for now, you guys. Thanks for showing up. We'll see how this plays out. I think, stay fluid, keep some cash or buying power in your pocket, and basically just try and trade what you see while keeping risk to a minimum. We'll catch you next week. Take care.
So long, everyone.